Right, let's look at their retail products and see whether there is any clear leader in this space. Lavan, let me open it up to you here.
Capitec's got a variety of retail products. Credit card is something that they've introduced more recently, as well as certain deposits that offer higher interest rates. This is innovative for a few reasons. As Paul has mentioned earlier on, Capitec's been under threat because the larger banks have started to eat into their space. So they've decided to compete evenly by trying to claw some back from space traditionally preserved by the bigger banks. This has given them quite a nice cross risk as well as acquisition of new clients. Their stats have shown 14%, now 17%, a 3% increase in market share in the LSM group that they occupy.
So we've got an innovator in Capitec in retail products.
Look, I mean, the African bank executives would love to have Capitec's retail depositor base. So that 10 billion rands worth is probably a little bit more now of deposits that come into Capitec, both from people who just have salaries coming and going, as well as people in the middle classes who've gone because Capitec has offered slightly higher deposit rates. I think that niche has narrowed a bit because everybody's looking for retail depositors at this time, because of course it's a wonderful source of funding. So I don't think Capitec is as innovative in that space as they were before. But Capitec, there's no question, they came to the market with a fresh approach, with a new technology system that had been invented and brought to the market sooner, more recently is what I mean. Whereas Standard Bank and Nedbank, you cannot believe how these old legacy banks have like 15 different admin systems that run on top of each other.
But what you're both saying is that although Capitec is perhaps leading in the retail product space when it comes to this LSM grouping, we've got the big four innovating fast now and playing catch up to the model.
But look and see what they do. So First National Bank is busy retrofitting its branches with iPads at the front, and you know, they look like superstore technology places with Genius bars and so on. That's going after the upper end client. Capitec is busy building little branches. When they get a big branch, they don't build another one and make it larger. They go and open another one in a different part of town. So, you know, their model is much more sort of low end, keeping the costs per customer down.
I'm seriously concerned about Able lagging in this space, because both of you have been going on about Capitec and not much about Able. Have they got this completely wrong?
No, they haven't. Able has got a very good formula. While they have a very significant footprint in South Africa, they're also very big in terms of the numbers that they lend out. They've got innovative ways of refilling capital onto their balance sheet, and they lend very wisely. Yes, the formula is good, but they lack on the product diversification side of it, and that's where I would say Capitec leads.
Paul, shouldn't you have seen this coming then if they lack on the product diversification? I can't speak now, I've got your problem.
I think Able didn't really want to be in this space as much anymore in the past. They didn't really want to be in full suite transactional banking with people, you know, making payments and all that sort of thing. They're in credit card, but partly that's because when they give somebody a new loan, they give them a card to go out and use to go and buy the building supplies or to pay the school, because those are the normal things people do with these microloans. I think now they're kind of getting tippy-toeing into the area of retail deposits, but that's, you know, going to be something that they'll experiment with. So Able's calling card in the past was the simplicity of their model. And in the loans game, it's not hard to find the customers. You know, people are desperate for credit mostly and will go out and find them. Remember, Able has got the Ellerine store network.
I have to go back to something that you said, that they didn't want to be in this space. Did I hear you correctly?
Yeah, historically, they decided that transactional banking was more trouble than it was worth. You know, who wants to be doing that nonsense with, you know, debit orders and people logging on online and people wanting to make payments, and branch network, of course, then has to be built in order to support it.
So they thought no go area.
Yes, but I think one of the products that they're experimenting with in terms of capital raising, because we'll talk in a minute about what work they do out in the global debt markets to raise money, I think one of the things they'll be beginning to do a little bit more of will be a retail deposit.
Right, now I'm going to start answering the questions for you both. So I take it from what you've said is that clearly Capitec is the leader in the retail space. Yes or no? I've simplified it for you.
It is. I just want to include one other thing,
Dangerous. This
just
is
to
now
follow up
dangerous.
on the Ellerines aspect. Able has made entries into innovation by acquiring Ellerines. Obviously, their timing was good. They bought in 2009 at the bottom of the market, and you can see that there was ambitions for them to develop a new style of business, as well as capture a lot of clients and maybe cross-sell some of their existing.
It doesn't change your answer. Capitec
doesn't
leads
change
in
the
the space.
answer.
Paul, yes or no?
Capitec, yes, I'm very positive about Capitec's, transactional model.
Good.
Like it.
Let's